We're going to go straight into our next session, and that is how to trade the NFP on October the 8th. I had to ask because I didn't know, but a man that knows all about it is Giles Coghlan. He is head of brokerage at HYCM. Welcome up, Giles.
Very good afternoon. It's very nice to be here with you. I'm looking forward to detailing how to trade the non-farm payroll next Friday. I'm going to be sharing with us some actionable analysis that can help us understand what instruments are likely to do depending on what happens next Friday. Before I start, if you're feeling a little bit sleepy and you'd like to stand up and shake your legs, please feel free to do that because I know you've had a long time sitting down. If you don't want to do that, that's absolutely fine. But if you just want to have a little stretch, shake your legs around, feel free to do that. Well, without further ado, I'm going to get into our presentation. I am one of the key analysts that works for HYCM as their chief currency analyst. And HYCM has a wealth of experience. It's a broker with over 40 years worth of experience. Now, we started in Hong Kong, but since then, we've spread with offices all over the world. In London, here we have an office in Dubai, Kuwait, Hong Kong, and Limassol. So we have a broad, global, and a deep, rich heritage that's based on being financial experience that you can trust. We have significant regulation from some of the most strict regulators in the world, including the United Kingdom's Financial Conduct Authority, the FCA. You can just see there. We also have the Dubai Financial Services Authority, as well as the Cyprus Security and Exchange Commission and the Cayman Islands Monetary Authority regulation. So we have a broad range of regulation from around the globe reflecting our global presence as a broker. We also have picked up a number of awards over the years, including Best Forex Broker from World Finance in 2021 and Global Finance and Banking Best Forex Broker 2020. We're also featured in numerous top media publications. I appear across many different media publications, making complicated financial concepts simple. That's one of the key things that I offer as my chief currency analyst role, is to explain sometimes complicated financial concepts simply. And as a result, I am regularly featured across some of the world's top media. As a broker, we allow our clients to trade FX, commodities, the major world indices, as well as individual stocks. We also have an MT4 and MT5 platform and a proprietary mobile trading app. One of the good features of HYCM is you can deposit and withdraw your deposits in dirhams here in Dubai. And you can also make those deposits at local banks. So it's a very convenient way of transferring money locally here in Dubai, which I thought was worth mentioning since we are here in Dubai. We also offer free access to professional trading tools. One of my passions, having come from the retail trading background, was how few professional tools are actually available to retail traders. That's one of the things that I've brought to HYCM's clients. And I'm engaged every single day explaining complicated market concepts to our retail clients. We also have online and offline trading education, including one-to-one consultation with myself as part of some trading packages that we have. Myself, it's always a bit embarrassing to introduce yourself, but I've got over 10 years experience in technical and fundamental analysis. I've already explained how I appear over the world's media, making complicated financial concepts simple. I also am a regular contributor to Forex Live. I have a daily blog there. I don't know if does anyone here follow forexlive.com? Well, I'm a daily contributor there. It's a very good website. If you haven't yet found it, you definitely want to find forexlive.com. And I'm one of the senior analysts at Financial Source, so I won't talk about myself anymore. Let's get into the details. How to trade the non-farm payroll next Friday. I'm going to explain to you now why the non-farm payroll is important and why it's particularly important next Friday, and how certain instruments are likely to react. So it's going to be three things: why the NFP is important, why it's particularly important now, and of great interest to traders is how we'd expect certain instruments to use and how to trade it. So what exactly is the non-farm payrolls report? Well, the non-farm payrolls report is arguably one of the most influential economic releases in the economic calendar. It gives a picture of what US employment is like. Now, the US is the world's largest contributor to GDP. About 25% of all the world's GDP comes from the US. Now, when you look at the US economy, 2/3 of the US economy comes from the wages and the salaries of the US citizens. So what the employment is like in the US is a very big indicator for not only the state of the US economy, but also the state of the economy across the world. The other reason the non-farm payroll is very important is due to the timing of the release. It's usually released on the first Friday of the month following the data it represents. So, for example, September's jobs are going to be released on the first Friday of October, hence October the 8th. So those reasons mean that US employment is always important, and it's very important not only economically, but also politically. Now, the breakdown of the separate components are as follows. You have the headline reading, you have the participation rate, and you have the unemployment rate. Now, the jobs number is consisting of two major surveys. The first survey is a household survey, and that is a survey done by the US government of US householders. A total of 60,000 US householders are interviewed by the US government. It also consists of a payroll survey, which is 444,000 companies which are interviewed, and the companies themselves send the data in for the calculation. Now, the headline is the big figure, and that just tells you how many jobs are added, how many jobs are lost. And that's of particular importance coming up now, and I'm going to explain that why in a few moments. But I thought it was also helpful just to understand how it worked. You can see here the participation rate. Now, the participation rate is simply everyone who's over the age of 16 who is either in work or able to work. Now, when an economy is doing well, the participation rate rises. When an economy is doing badly, the participation rate falls. In the US, the participation rate has been rising since the 1960s with the entry of women into the labor force. The unemployment rate is simply the number of people who are unemployed. And that data for the unemployment data is taken from the household survey. Now, there's many more little details I could get into with you about the non-farm payrolls. But I wanted to not only give you a very brief introduction what it is, why it's important, but as traders, we want to know what's important right now, because that's where the opportunities are. And the focus right now is obviously on the US interest rate projection. Now, on September the 22nd, Jerome Powell gave a little surprise to the markets, saying that he expected bond tapering from the US to be completed by the middle of next year. Now, he also said that sufficient progress had been met with inflation, and he said it's all but met with employment. So he said he didn't need to see one really good jobs report. All that's needed is one solid jobs report, and then that confirms what the market's been pricing in over the last 4 or 5 days. Namely, a November taper announcement and tapering to completed by the middle of next year. So this means the first test of the Fed's outlook is coming with the jobs report due on October the 8th. So mark my words, traders will be looking at this very carefully. Why? Because it either confirms the Fed's policy or it contradicts the Fed's policy. Do you remember the dot plot shift at the last rate statement? Remember how Powell announced surprise tapering to finish by the middle of next year? There was a little shift that went on, and I was speaking on my Twitter account, you can always follow me at Giles Coghlan CCCA, about the symmetrical triangle pattern in the dollar-yen. That's broken out very nicely, approaching 111, and if everything stays on track, I'm expecting that to move to 115 over the next few days and weeks. So all that's needed is this one good, decent jobs report. Now remember I showed you the different components of the NFP? Well, that's important, because when it comes to detail, what ideally we would want to see is the jobs, the participation rate, and the unemployment rate all pointing the same way. So if the headline was good, if the participation rate was high, if the unemployment was low, that would mean a very hawkish outlook that we would expect. And as traders, that's what we're looking for. We're looking for the clearest, the most obvious, the most succinct analysis in order to explain and understand what's happening. So as I said, Jerome Powell, he said, look, this was the key phrase, employment test is all but met. We're basically there, he's saying. So this is the number of jobs in the US. You can see here that large paled out bar chart. That was the number of jobs before COVID-19. You can see here the gradual recovery. The closer we get to that peak, the more reassured the Federal Reserve is going to be. Now, there are wider questions about the state of the US job market. Have some people taken early retirement? Were some of those people signing on just for bonuses, like in Apple and Amazon, then they're going to withdraw from the labor force? However, the headline figure that the Fed want to see is another strong jobs report, and the first test is going to be October the 8th. So, how will this impact the US dollar? Well, the US dollar yen looks set for significant gains. When I was preparing this seminar, the US dollar Japanese yen was in a nice symmetrical triangle breakout, and I've got a 300-point target. Now, the US dollar 10-year yields and the US dollar Japanese yen, they tend to track each other. So that breakout in US 10-year yields, a simple way of trading that, if you're not trading bonds, is to trade the US dollar Japanese yen pair. It's a trade I'm looking at and will stay with as long as the conditions look appropriate for 10-year yields to rise going forward. You can see here, this is the US 10-year yields. Now, when the yields are rising, it's because bond traders are expecting coming interest rate hikes. So with the Fed signaling that they're moving towards interest rate hikes, it's only logical that bond yields start moving higher. So as the bond yields are moving higher, we're expecting the US dollar Japanese yen pair, the 10-year bond yield, if you overlay the charts, you'll see there's a very close correlation. They don't always correlate, but they do for the majority of the time, and when they're not correlating, there's usually a clear reason. So one of the interesting things, I was speaking to a number of people, is how will this impact gold? Now, if you're trading gold, these are the three charts that you have to have. One is real yields, which I'm using in the blue line, I'm using that as a proxy for real yields. Then the dollar index is the red line and gold is the yellow line. If you look here, September of 2020, that's when gold really rose high. Do you remember when gold really rose high? Well, people who understand the way different markets correlate were not surprised by that. Why? Because real yields were moving lower at the same time the dollar was moving lower. Do you remember how at the end of 2020 everyone was very bearish the US dollar? Do you remember that? Well, real yields were also falling as well. Now, real yields is the US 10-year bond subtracting from that inflation expectations. That's what the real yield is. And it's the most sensitive, gold is the most sensitive to movements in real yields. So when real yields and the dollar fall together, that was the perfect environment for gold upside. Now we have the exact opposite. Real yields are rising again. Why? Because bond traders are expecting interest rates to rise. And the dollar's rising. That's why gold has been falling over the last few days. That's why, despite there being one of the best technical weekly bullish pin bars on the gold chart, I wasn't wanting to buy gold. Because I knew the fundamentals were completely wrong for buying gold, because real yields are rising, the dollar's rising, so that means gold should be falling, and that's the pressure. Now, the good news is that on Friday, the 8th, there's going to be a reassessment. That's what the markets do. They expect one thing, then incoming data comes and they reassess. And the opportunity and what I teach people learning to trade is how to trade this, the shift. Okay? It's the shift. And the way to understand it is imagine like this. Imagine I said to you, you're coming to my house and we're going to go out for a lovely meal in a top restaurant. And every time you call me, I say, you're coming to my house, we're going to a top meal in a great restaurant, make sure you look really smart. And then one day, I say to you, actually, we're going to go to McDonald's. How will you feel? Disappointed. You feel upset. You think, oh, this guy had my hopes up. Do you see? There was a shift. And that's exactly the same way that people trade the financial markets. They expect. Oh, there's a shift. That's what can potentially happen on Friday the 8th. So this is the way that we can typically expect markets to react. If there is a hawkish outcome for non-farm payroll, so if the jobs exceed maximum expectations, then we'd expect 10-year yields to rise, the dollar to rise, dollar yen, gold to fall, and stocks to fall as well. Now, the reason stocks fall is because if interest rates are rising, it will become more expensive for companies to service their debt, so future profitability is hit, stocks fall. And we have exactly the opposite for the dovish outcomes for NFP. Now, I have to wrap things up. I've been given some signals to close. I have a lot more to say, and you can follow me there at Twitter and also my blog, and follow me here at LinkedIn if you want to take those details quickly. And I'll just explain some other opportunities that we have as well. Now, if you would like to trade into the year end, I am going to be sharing at the Duke's Hotel in Dubai on October the 1st from 4 p.m. to 8 p.m. how to trade into the year end. I'm also going to share with you the professional tools that professional traders use to trade. I'll show you what they are, I'll show you how to use them, and I will give you access to professional analysis, including access with myself on a day-to-day basis for an ongoing period of time. I know how hard it is to learn to trade because I learned how to do it. I also know how to teach others, and I enjoy it because I get satisfaction from opening the Pandora's box and making the complex plain. That's what I love to do, that's what I'm here to do, and if you want to find out more, please do. You can also come and meet us at booth number 22, just outside the door, on the left, HYCM. We have a number of different packages, and it will be really great. I also have some leaflets to hand out at the booth so you can register if you'd like to find out more. Thank you all very much for your time. It's been a pleasure to be here. Thank you.